All right, everybody, welcome back. It's been 4 weeks, I believe, since I made a video. And what's crazy is I actually had people reach out, some people that I know and some people that I don't know, asking where's the videos been. I was pretty consistent on a weekly basis. And, again, no excuses for me. Yes, I will address why I've been forced to stop trading temporarily. And we'll get to that towards the end of the video. But those who reached out, I appreciate it. And I honestly, I just thought I was just another another dumb YouTuber. Just documenting my journey. But I guess some of you guys enjoy following along. So let's keep going. A couple other things that I wanted to cover before I get into why I've been forced to stop trading is my January performance, a look at my portfolio and some of the stocks that I'm not very proud of, and then how I'm kind of helping my dad. I will look at his spreadsheet, not his account, and really kind of target his conservative approach, which actually I really like now. And then we'll round it out with basically what's going on with me and then what's the next steps. And right before we hop into the January results, one of the things that I talked about in my last video, I believe, is my leaps strategy. Remember, I was going to close Nvidia because it was hovering around even. It had been open a while, but Apple was coming up on earnings, so I was going to get an Apple leap, go through earnings, close it hopefully for a profit, and then open an Nvidia leap for through their earnings, and then hopefully close that one for a profit. Well, it all started to work out perfect, and I'll show you that. I ended up getting an Apple leap, made like 1,800 bucks off of it in about 5 or 6 days right after earnings, and closed it for a profit. And then that's when basically I wasn't allowed to trade anymore, so which we'll get to. So I wasn't able to finish that strategy, but it was really cool that I finally had a leap that worked out well. So let's just go ahead and hop right into the January performance. So how did I do in January? We traded on roughly around 138,000. That's basically what I started that month with. And there were some withdrawals from here. We had to move some money from here, and go buy some stuff, basically, etc. So that's why you see a big difference between the 165 and the 138. But for January, we closed realized gains. We closed at 5,800 bucks. So that's 4.1%, and that's great. I mean, that's one of my best months yet. And the reason it's one of my best months yet is that I could almost lump in the Apple Leap into this. It would have actually been around 7,600 bucks, which divided by 138,000. That's around 5.5%. I mean, that would have been my best month, but I closed it on February 2nd. So, technically that goes into the February month, but I haven't really done any activity in February. So, it's a wash anyway. But just in general, that was a trade that I was executing very late towards the end of January and closed it literally on the Monday after January closed. So just January for me was really good. So pretty excited about that. All right, so now diving into the actual accounts. So you can see this was my leap options, and this is what I was talking about. The only thing I did in February was this one leap, so 1,800 bucks. That was the Apple leap, and look, I closed it on February 2nd. And remember, I had bought this basically, I think Monday or Tuesday of the last week of January. So this is hands down my best trade yet. And then my plan was to basically now roll this right into an Nvidia leap. And then since then, Nvidia's been doing okay. But I think that leap would have worked out pretty well too. But we didn't do that one. So also as part of the transparency, what I wanted to do is just kind of jump in and just show my account. And it's down. Now, when I say it's down, remember my 130,000 that I'd started January with is also comprised of that Leaps account, which is around 13,000. So basically that 114 you see there plus the Leaps account is around 127. So the account's down around 3 grand from just me really not touching it. So if you kind of look at this, I've got some not great stocks in here. I've got a leap on AMSE, which is not doing good at all. But you can see just in general, overall, my lot details on this one, I own it at an average of basically right around what, 50, 48, 49 bucks at a share, and it's trading around 33. I could probably go get some covered calls on this right now or just wait. But again, I'm not really trading right now, so I can't do anything. BMNR, man, this one's been really, really tough. I actually have this one in a different account, and it's just been really tough. I think my cost basis on this one is around $50 a share. So this one's tough. I can't. It's just this is one of those dead money stocks. I can't even get covered calls on it, even if I could trade. CoreWeave has actually been pretty good. I had CoreWeave. I've kind of went out of in and out of. I've been making money off of it, doing pretty good. CoreWeave, my lot cost on this one is obviously lower than this. So if you look at the lot details, I own it for around $83 a share. It's trading around 98. I could go get a covered call on this around 105 or 110, make $400 or $500 in premium, and still, if the shares get called away, whatever, it'd be a $15-16 per share gain. That's the real strategy miracle right there. So that one's doing really good. HIMS, nope, not good at all. Another one that I'm kind of considering dead money. Even if I was allowed to go trade with my cost basis being 42 and it trading around $16, no bueno. Hood, another one. I got 200 shares here. Cost basis around 124, and it's trading around 74. I still believe in Hood. It's just going to take a little while to recover. But again, this is a big, I'm down 40% on that one, 60%, 51%. And then Pins, the same thing, just not a great pick. This covered call, so part of my not being able to trade strategy is just to let these things run out. And that's basically why you don't see any covered calls or any cash secured puts, because a lot of this stuff is just, it's just going through its motion and just running out. PSIX, this was one that went way, way down, remember? But we've actually, this one recovered. So again, this is one that I think my cost basis on this one, let's see, cost basis on this one is 83, 86, 89, and 87, averaged at around 87 and a half. And it's trading at $94. Again, another one I could go get probably $105, $110 covered call on and make a really good return. And if they get called away, who cares? So it's like this one and CoreWeave and some of these others like VST were the stocks that I was kind of using to carry the really bad stocks, if that makes sense. So, but I'm not really doing that right now. So everything's just kind of sitting. Serve, again, this one is, I'm actually not too worried about this one. This one, it's just a pretty cheap stock. It just doesn't cost a lot of money. And this is another one. When I'm able to cover call again against these, then things will be fine. I'll be able to make money. And Serve is, if you look at their chart, I showed it in another video. It's very up and down. So this one actually is one that you can do decent on if you kind of play the Bollinger Band. SMR, this one's been a really tough one. I mean, you can see my cost basis is around $36. I have one covered call that's out there just for a ways out, and I had opened that probably mid-January or something, just to try and get some premium. This is a tough one, but I knew it was a speculative play, and sometimes this is what happens with the speculative play, and that's okay. So SoFi, again, I mean, you go look for anybody doing options on YouTube, and I would say 95% of them was doing the whole strategy on SoFi. Again, this is still a good company. I mean, they are, they're just, they've taken a big hit. And the result of that is my cost basis is right around $27, and it's trading for 18. Again, I could probably get some covered calls on this if I could trade, but right now it's just sitting there as a stock that's down. And VST, this has actually been a pretty decent one. You can see I got a covered call that's going to run out. And it's at 190. And my cost basis on this one is 176. It's trading for 170. Again, this is a perfect one where set a covered call at around 180, 183, and get some really good premiums. And who cares if you get the shares or not? I mean, remember when you get assigned, or if your shares are hovering right around where the stock is trading from, like at your lot cost, then you're going to get really, really good covered calls. And just being honest, like this is, these ones that I'm labeling as, they're in good shape, even if they're slightly down or even up a little bit. These are the ones that I would have been carrying the rest of my terrible portfolio on through the month of February and other months. And then, getting into some other good cash secured puts or whatever it may be. So that's how my account's doing. And, I just wanted to be brutally transparent. Some really good picks in here and some really bad picks. And that's okay. That's just part of it. And now what I wanted to do is kind of hop over to my spreadsheet, and I want to show you something. So My average delta, and look, I'm not gonna lie, I've said this from the beginning. I've been playing it pretty risky. You can see if I just keep going down all these that had been closed and assigned or whatever, this is all my cash secured put stuff. My average is around 28. So, they say, okay, target that 30 delta, but, I'm starting to see and I'm learning. And again, I'm not claiming to be some expert. I've always said that I've been learning through this process. Is these 28, these 30 deltas, averaging around 28, you're going to get assigned a lot of shares. So, and the reason I say that is because as I'm kind of looking through these ones that I'm working, helping my dad work through right now, other than these two 28s and a couple of these 24s early on, only because I really think that STX and WDC are really good stocks to trade on. If you go look at the fundamentals of those companies, they are printing money right now. So these would be okay from my perspective. These are not speculative plays at all. These guys are just killing it on earnings and blowing revenue and everything out of the water. So him and I went a little higher on that one, and we ended up with some really good premiums. And they worked out. They closed these early and etc. Hood and Amazon, we got assigned those, and those were high 28s. But I tell you what, PSIX, which we just closed today at a 28, but what I've really been kind of doing is going sub 20, trying to go around sub 20 and getting a lower premium, which is fine, but being just a lot more conservative with this portfolio. And it's kind of been working out well. And the reason I say that is if I pulled up his account, you see some stuff that's dropped pretty big, like Iron and SoFi and all that. A lot of these are still in really, really, really good shape. They haven't gotten signed, and PSIX is a good example. I was able to close it today for an early profit. And all these right now are sitting pretty good. CoreWeave is trading above that. I think Iron today is trading around 43 or 44 bucks. SoFi is at 18. WDC is going to be, I don't know where, I think it's somewhere in a $300 range. I didn't pull up my chart today. Serve, we just saw that, it's trading around 10 bucks. So, he's in good shape to be able to just kind of let these ride out and just not even get assigned the shares. Hood was one that, this thing just kept falling and falling. When we got this cash secured put back on January 23rd, Hood was trading around 120 bucks or something, and we went, all the way down to 100. And you guys probably, I would say, the majority of you watching this channel has some Hood stuff, or is at least been playing around with Hood and has experienced the same thing of all of us. So, what I'm really learning from this is when I get back into the trading, which is hopefully in a few months, is I'm gonna probably target all sub 20s. I'm going to probably stay within that 14 to 18 delta range and just, be a lot more conservative. So anyway, look, this is part of my journey, right? I've never claimed to be some expert. I'm learning like everybody else and not going to be perfect with it. But just addressing some of the feedback that I've gotten in, I call it the criticizing, constructive criticism. People are saying, you can't do this, you can't blah, blah, blah. That's not true. I mean, of course, there's risk, and you saw my portfolio, and it's not looking great right now. But there are still some stocks in there where I could still go get, 2.5%, 3% return on my overall portfolio without even being able to touch some of them. So I think for me, they're not right. If you really pay attention and you do this stuff, yes, you can make a living doing this. I just don't have enough capital to do that, and that's okay. So I think once I get back to trading, I'm really just going to slow it down a little bit and have more of my portfolio averaging that 2%, 2.5%, maybe 3%, rather than having only a quarter or a little bit more, maybe 40% of my portfolio averaging 6 and 7%, and making so that's kind of what I'm targeting when I get back into this thing. And let me just go ahead and cover that real quick because I wanted to keep today's video relatively short. So long story short, basically I've been court ordered to not be able to trade on this account anymore, and I'm not going to get into exquisite detail on that. I'll just tell you that the money that you see here, I'm going to be trading on about half of that. There you go. Right. It's going to be split right down the middle. So life happens. I've just been kind of working through that. And, bring it on, right? A layoff and that and all kind of other stuff. Who cares, man? You just keep moving forward. You make lemonade out of lemons and you just keep moving forward. So that's why I'm not trading right now. But I will say that when all this is said and done, one of my original intentions was to sell our last rental and move that capital into here and be trading on a higher dollar amount, somewhere close to the 300 range. Well, we are going to sell that rental and some other stuff, obviously now, but we are going to sell that, and I would say eventually. What I think I'm going to end up with is actually a little bit more than I've been trading on. So, um, it's just right now it's just a temporary roadblock. That's all it is, and you kind of take the punches and you roll with it and move on to the next thing. One of the things that I've really, really, really been focusing on is starting a business. I think you guys already know that I started that skincare product company with a buddy, and I don't really get into it here. It's very e-commerce based. Maybe I'll talk about it more. But man, you cannot believe how much I've learned through the Amazon stuff with that. Maybe I'll make a whole video on that. But this other one's going to be a lot more service based, and it's going to be a tattoo removal clinic here in Georgia. And I'm telling you, I've been just heads down, really, really, really focused on moving that forward. And as of this week, I signed a location lease. So that was the thing that I was looking at in the past and kind of got scared off a little bit. And this time I'm all in. So I'm moving forward with that, signed a location lease, and just starting to, build out what it looks like to open one of those. So I'm actually thinking about transitioning, not transition. I'm actually thinking about starting a series on that. Like, what does it look like to start a small business if you've never run a small business? If anybody would have any interest in watching a series like that, comment or something. So, because I can't really put out a lot of content on trading right now, and I'm not going to put out content on helping my dad trade on his account. That's just his account. It's not mine. It's private. So, um, if anybody's interested in these pivoting, I mean, it's investing, right? I'm average dad investor. I don't know how to run a. I've never started a small business. I don't have a small business. So this is, again, another, just like the options, just jumping in and figuring it out, man. I'm super, super excited about it. Every day I wake up and, spend probably 12, 14 hours throughout the day, of course, with the kids and all, late at night or super early mornings, and just working on getting this thing started. And I'm super excited about it. So I might start making some videos on that. But in the meantime, thanks for anybody who reached out. That's what's going on. Can't really trade right now. Had a phenomenal January. My leaps strategy worked perfect, and it looked like it was going to work even better with if I could have went for the Nvidia one through earnings. But it's okay. That's all part of it, and I'm looking forward to getting back to this at some point. I'm still keeping my skills a little bit, I guess you could say, by helping my dad on his account, because we look at stuff together and we make decisions on it. And ultimately, he's the one doing the trading, but we just kind of look at it together. So I'm staying up to date with it. And then of course my mentor, this is his job. He's continuing to trade. So we still talk about it and all the time. So anyway, that's it. I don't really have anything else. I'll probably talk to you guys next week. If I do, it'll probably be pivoted to a different type of video series. And what I'll do is I'll just start a new, whatever YouTube folder it's called, not a channel, but just a YouTube series or whatever, on just what it's like to start this small business. So anyway, hope you all enjoyed it. If you stuck around this long, I appreciate it. And I'll talk to you on the next one.